Hello, Uncle Jim here. Today I want to share with you the fact that you can have multiple income streams from investing. I'm going to talk about my multiple income streams, how they work, how much I make, and go into some detail about my trades last month. So stay tuned. I think you're really going to enjoy what I have for you. Okay, first of all, I'd like to kind of give a market update. Don't really have much to add from last week. I do think the Fed's going to hold steady. Inflation is slowly coming under control. I don't think it's as crazy as it was about 6 to 9 months ago. I do believe commercial real estate is one headwind that we are dealing with, and a lot of office space, especially in cities like New York and San Francisco, are having problems. They're having a tough time selling commercial buildings, and I think that's going to continue, especially with these higher rates. Now, the other thing that I've heard recently that I wanted to share, I thought most people would find it real interesting, is more information has come out about demographics for China, and clearly China's in trouble. The number of people are declining pretty massively. A lot of it has to do with the one-child policy they put back in effect. I think it was back in the 90s. May have been a little later than that. I don't remember the exact date. But there's been several really interesting commentaries that have come out about it. I'm going to leave a link below that talks about one particular person I like to watch. I'm going to share a link to his YouTube channel. I think his name is Zeihan, and he puts it in a really good perspective of what's going on with them. So I'll share that below. And even Invest Talk talked about it today. Is China going to go through what Japan did? And they kind of compared numbers, and it does look a lot like China could go through a similar situation that Japan had in the late 80s. So just wanted to share that. I find it interesting. If you're investing in Chinese-based companies, you may want to back off those investments, or companies that have lots of investments in China, they may be at risk going forward. Maybe not in the short term, but definitely in the long term. So I just wanted to share that. I thought it was kind of interesting. So let's go ahead and get started. Now, I get a lot of questions about how much can you make selling options and with investing. So I like to look at it differently. I look at it as really multiple income streams. Now, a lot of people may disagree with me, but this is the way I like to look at it. So first of all, when you're investing and you're picking good companies, hopefully you're going to have good appreciation long term. Now, you may have down periods, bear markets, but long term, the market should be higher in 5 to 10, 15-year increments. And that's what I've seen. So the first type of income stream or type of income stream you could have is something along the lines of the 4% rule, where you can liquidate some of your securities. In the 4% rule, they suggest 4% on a yearly basis, depending on what's going on with inflation and what's happening in the market. I believe recently some people have said you can go higher than 4. I've also heard people say you can go lower than 4. But that's one thing that a lot of people do. So as your assets increase, 4% is a good rate that's not going to, blow up your account or cause your securities or cause you to liquidate your securities very quickly. So that's one avenue. I personally am a buy and hold person, so I want to keep a lot of these securities forever. I want to pass them to my son so he can inherit them. But again, if you're looking at one way to do it, some people, that's all they do. They just do that, and then maybe a little bit of dividends, which brings me to my next type of cash flow you can have, which is dividends. And I really like dividends. To me, they're the most passive form of income that you can earn. And I actually set goals related to dividends. So when I first started trading, I didn't really think much about it, but about 2 years ago, I started setting goals with dividends. So I think I originally set a goal of 1,500, and I reached that. Then this past year, I set a goal for 2,000. Now I'm really close to reaching that. If you look at Schwab and you go under the summary page and in investment income, you can actually see how you're doing with dividends. And I'm really close to earning the 2,000 a month. I think I'm at like 1927. At the end of the video, I have where I'm going to share my trades from last month and kind of give you an overview of what my cash flow looked like in May. But I give exact numbers at the end of the video, so I encourage you to stay tuned. And as always, for any of my members that are watching, I'll also make this available to you after the video so you can actually have access to the spreadsheet. All my spreadsheets are accessible. So if you're in my membership and you can't find a specific spreadsheet, just ask me and I'll upload it for you. And if you're curious and want to learn more about my memberships, it'll be in my description. They're fairly inexpensive. The low level is $10 a month, and I have a $25 a month that's one-on-one with me every week. I say 15 minutes, but it always goes over, which I'm fine. I really enjoy talking with people. But I just wanted to share that. So I'll have that at the end of the video. We'll go over my trades. I'm not going to go into a lot of detail because there's a lot of trades. I just want to give you a real feel for how much income you can bring in on a monthly basis. And then, so the next is option premium. And depending on your risk, how risk averse you are, you can pick how much risk you want to take with options. And that's one thing I love about options. So if you're very risk averse and all you really have done at dividends and appreciation, like we talked about, maybe that's something along the lines of the 4% rule, well, then you could just do covered calls. Covered calls to me are the safest and easiest option strategy to use. And it's just, if you own a stock, say you own Apple, and you're willing to part with Apple at a certain price, you can sell the opportunity for someone to buy those shares from you, and they'll actually pay you premium. And you can decide how high you want to set, those strike prices. To give you for instance, again, let's say Apple, I haven't looked at Apple today, but let's say Apple's $200. You could set a price of $300, and then you can determine how far you want to go out. And, you can kind of base that on how much risk you want to take. So a lower price, you pick up higher premium. So if they're trading at 200 and you pick 220, you'll have a higher premium than if you pick 240 or 270. And also you can pick up more premium if you go farther out. But you can actually, in some ways, do better if you do multiple trades shorter period, with shorter periods of time or expirations that are more like 30 days versus 60 or 90. I know this is confusing if you've never heard anything about options and, didn't realize you could also trade them. It's not just, a lot of people, and before I started selling options, I just thought of what executives get at companies, the corporate stock options. But this is very different. This is something anybody can do. I'm by no means a professional at doing it either. It's just something I started doing almost 12 years ago and really learned how to do it in my journey about 3 years ago. So, so if you want to stay risk averse, you could just do covered calls. Then depending on, you wanted to take a little bit more risk, you can look at something like cash secured puts. So they're in my mind, they're a little bit more risky than covered calls. Some people may disagree, at least that's my opinion. And then you can even do a different type of put, which is called a vertical put credit spread, where you're also buying a put to protect you on the downside. And it's probably, it is a little less risky than just buying a cash secured put, unless you're, have already decided you want to buy that stock and you want to buy it at that price. Then maybe the cash secured put is a little risky. Now, before I jump into the next section, let's talk about those three items in more detail. Now, if you're just going to do covered calls, what I'd like to do is to double my dividends. So if I'm earning 3 to 4% in dividends, I like to get another 3 to 4% selling covered calls. And I found that equation works quite well, that if I can earn that amount, I'm also rarely having anything assigned away from me, because when you do a covered call, if you're assigned, it's your shares are taken and you get the cash. But setting a goal of doubling your dividends can be a big boost. Again, if you're earning 3 to 4% just on dividends and you can double them, you're talking, 6 to 8% just on dividends and covered calls. And some people can earn a really good income with that. Now, with cash secured puts and vertical put credit spreads, and I like to combine those, And then also, if you combine those with the covered calls, a lot of people ask me, well, what can I make on a monthly basis? If I have, say a $50,000 account or a $100,000 account, and I have an account close to 100 and I have an account close to 50, and I've been trading in both. So this is from my own experience and the way I trade. I've been able to do between 1 and 3%. Some months I may do 3%, other months I may do 1%, and that's combined for those three strategies, which is really good because, again, if you're doing 1% a month, that's 12% a year. If you can do 3, you could do 36% a year. Now, it's very difficult to do 3%. It's only on rare occasions I have. And I believe it was 2 years ago when we went through in 2021 when the market went way up that I was able to do 3%. It is doable. It's very difficult. I do hear other YouTubers and other people out on social media saying you can earn 5, 6, 7% a year. I've never been able to do that, and I feel like it's way too risky. So, if you hear those kind of rumors or you think that may be possible, I just want to warn you, I like to ask people if they make those kind of comments, show me the trade, show me what trade you made. And no one's ever showed me a trade they made where they made that kind of return, at least for your whole account. So, and then next, I am going to turn to my trades in May and how I did. But again, I wanted to reiterate that it's a lot more cash flow than people realize, and it will boost your long-term investment. Even if all you do is cash secured you can end up increasing the growth of your account by 3, 4, 5%. So, at a minimum, I would consider looking at it and starting slow. I also have seen a lot of people, subscribers and also people in my membership that, I like to put it this way: start with the low diving board. Don't go to the high diving board. Take your time. Start with, one contract. Do one trade at a time. Do it with less risk. Don't jump in too quickly. I feel like it's a lot riskier when you're doing like 5 contracts or 10 contracts. And then I also feel like it's a lot riskier if you're also picking a delta that's a lot higher, which usually translates into, if it's a put, a higher priced put, so you're taking a lot more risk and you run the risk of it being assigned to you. So again, start slow and steady, set goals. That's what I've been doing for the last 3 years. So set goals, reach those goals, and then increase them. And slow and steady is how it's worked for me. So I encourage you to have a similar approach. Start small and then increase it over time. And I think you'll be really amazed at the success you can have. So that being said, let's jump into the next part of the video where I'll share with you my cash flows for May. So stay tuned. Let's jump into the next section. Okay, here's the spreadsheet I put together for May. This is something that I just pulled off all the other planning worksheets. I do a weekly planning worksheet where I track my trades and see how I'm doing for the particular week. So I pulled these trades off all the planning worksheets for May. And again, I'm not going to go into detail for every trade. What I did is I listed the trades by type. So the first, I believe, 6 were cover calls. I did them on, these are all companies, of course, that I own: PG, Intel, IGH is a ETF that I really like, and then eBay ARK is another ETF, which I've done okay with ARK. At one point I was really negative on it, but now I'm a little less negative on it. It's done fairly well recently. And then Schwab. So this month I did only 6 cover calls, which in previous months I've probably done closer to 50% of covered calls and 50% of puts. And then next I did only 1 cash secure put, which was on Camping World, and did pretty well with it. And then all the others were vertical put credit spreads with, a put that I sold and then I bought another put. And these again are all my some of my favorite names. You've got Polaris, QCOM, Williams Sonoma, Truist, IWM, which is the Russell 2000 Index, TFC, which is Truist, Met, Schwab, again Truist, Devon, Zoom. I do a lot on Zoom. BMY is one of the newer trades I did. I haven't done a whole lot on BMY, but I did in May, and then again IWM. So one other key point for people is sometimes diversification can hurt you with selling options. So I like to stick to some of the same names, and I may have multiple positions expiring on different months. I definitely have that with IWM. I also believe I have 2 different trades with Williams Sonoma. So now if I come down to the numbers, and this is what I really wanted to share in this video. So I brought in 1477 and just covered calls premium. So again, if all you wanted to do were dividends and cover calls, you could do that. And I was able to bring in over nearly $1,500 just with covered calls. Now with cash secured puts, I did 231, which, was one of my higher trades. And I used to do a lot more cash secured puts. I'm not doing as many as I used to. If I really get back into trading the wheel to pick up certain securities, and I may do more cash secured puts, but currently I've been doing more vertical put credit spreads than anything else. So here you can see I did 14 vertical put credit spreads and brought in 2630, and then dividends. This is my monthly average, 1922. So again, I had started with 1600 earlier in the year or late last year. Now I'm up to 1922. And that's, through assignments and also buying some shares now and again, where I can earn pretty good dividends if I find a company I want to own, and maybe I'll buy a small number of shares. I do have one really small account that I've done that before, so it's generating better dividends than it was at one time. I had a lot of stuff that was not generating many dividends in there, and I think I can do better by the end of the year. Again, my goal is to have 2,000 on a monthly basis with dividends. So the total of those different cash flows is 4338, which which isn't bad. Actually, I don't think it includes 32. Yeah, I don't. It's not including 33. So let me fix that. So actually it's 62.61. So the 43.33 is just for options. When you include dividends, it's 62.61. Now, one thing that's a little confusing is with the dividends, most companies pay dividends quarterly, so you get 4 payments. So this is stretched out, but most of the dividends come, in April, July, I believe October, and then December, even though December, you would think maybe they would come in January, but most of the dividends that I get come in December. I do have some that pay on a monthly basis versus quarterly, but overall, most of them are quarterly versus monthly. So total cash flow is 62.61. And then I was just going to share some of my best trades. So these were 2 of my best trades, and these were Truist, and I'm still trading Truist a lot. It got hit hard because of the banking crisis, but I like Truist, and I've been able to make this same trade of 25.15, and it's done quite well. And I'll continue probably to make it. I believe it's gone up over 30 or 31 now. And then the other one's Williams Sonoma. And what I really like about Williams Sonoma is they pay a good dividend. I believe it's over 3%, and they have no debt. So any company that can have no debt and pay dividends is a winner. And then with Williams Sonoma, I brought in 208, and it was a 96% return, primarily because I only had it for 44 days. So the returns, reflect how long you own it. We're only owning it for 44 days, bringing in 208. With the capital at risk of $17.91, it turned out to a really good return. And even more so with Truist, I picked up $367. And I believe that 2 contracts? Yeah, 2 contracts. same idea. So required capital was 1632. And again, this I only held for a very short period of time. So those were my best two trades for the month. And again, they continue to be two of my favorites, Truist and Williams Sonoma. And then at the top, and this is at the top of all my planning worksheets, but this is my weekly goal and monthly goal. And I like to really keep it simple. So if I can do a trade and make 200, then I'm done, pretty much done for the day. And I go on and do other things. I don't stay on the market all day. Some days I don't get on at all. Like this past Monday, I didn't get on the market at all. And then I try to shoot for 4,000 monthly. This month, I believe I'm right around 3,600. So I probably won't get 4,000 for this month. I'll get close to it, but as you see, this actually should be 2,000 less. So I believe this is impacted here, but if I take out 33 and I put back 32, this will show just for options premium. I did 43.38, so I'm pretty close to that 4,000 on a monthly basis. And this is with all my accounts, so it's most of my trades currently are in my retirement accounts. I do have some in my brokerage, but I've moved a lot of them to my retirement accounts, and they're primarily in two accounts. And that's how I came up with the one between 1% and 3%. So it alternates depending on the account, how much you have in your account. So the more you have in your account, the easier it is to get closer to 3%. If you have a smaller account, it's probably going to be more like 1%, 1.5%. And on average, I'm probably averaging about 1.5%. So that's it. As always, if you have questions, comments, something I wasn't clear about, please add a comment and I'll address it. I try to answer all my comments. So thank you for joining me, and I hope you have a wonderful day. Bye-bye.